Good morning, a video morning brief of the U.S. grain markets, Tuesday, Jan 28, 8:37 a.m. Eastern Time, and which pause for critical point. Let's begin with the corn chart, March futures, but this is a spot chart, rollover chart. Market is up from a level 4 bottom placed yesterday. The top can occur today, and the market can be down tomorrow. Level 4 intra-week pops and drops. Some of them, the swings occur just during the day, the most important or major intraday move, okay? So trade below the overnight low of 481 March probably is a sign a level 4 swing is down into tomorrow, and it may not bottom to the following day. The model is also suggesting it's too soon for a level 3 bottom, and I'm trying my best to see how that's wrong that it bottomed yesterday, because we're getting into some fuzzy stuff here on the fundamentals when the market shouldn't really go any lower than what it's already done. But it's still just not right for a level 3 bottom. It is possible the market starts moving higher, but it would be slow pace likely until that level 3 bottom is in place, and then it would pick up the pace, move faster. And so it can bottom ahead of what we anticipate, okay? But for the moment, watch out that it might bump its head on the 5-day moving average. It's rolling over below the 5-day open, which could be a sign. It's just running in a little bit of issues here on the momentum of prices. And again, if it trades below yesterday's low, I think it's lower. Ideally, it's lower anyways. It ought to bump its head near the 5-day average. Starts moving up towards 490. We still won't have a level 3 bottom, but it would be a sign the market's anxious. It's already given us all the selling they wanted. The model's running behind, okay? And some of the market participants, including myself, are running behind. It can occur because it is a tight enough market and anxious enough market to do it. Ideally, it's going to be sideways to lower in the next few days, and if lower, we still have an outstanding target that's valid at around 474 down to about 470. And look at yesterday's low as a potential downside target as well as recent daily lows. Feels like ought to be calling a level 3 bottom here, just can't do it, all right? So if you can manage the risk, if you're more bullish than I, go for it, because as I look out into next week, yes, prices ought to be higher into a level 3 top. Also keep in mind February 1st, Saturday, we could do Canada and Mexico tariffs, and I would think that would hurt business for the future. It may entice some people in the marketplace to think of inflation and put commodity prices up anyways, but frankly, I would think it would kind of hurt us that they would then say, well, we're not buying any more from you. Then again, they may need to still build inventory and say, we bought some before tariffs, we might as well buy some after tariffs, and get the inventory built so we can have that day that we can refuse to buy for a while if we need. So I would say currently the corn market really isn't saying much about the tariffs unless it thinks it's actually bullish and inflationary, okay? Don't have upside targets for this next level 3 top, but because of the weekly chart and those larger trends, which we'll discuss on Thursday, maybe even tomorrow, we really have to consider that it really should have prior prices still, that it should take out last week's high at 494.5. Doesn't necessarily have to do it with this next level 3 top, but it probably it's likely, okay? So again, very, very close to a bottom. Most of the downside may have been seen. Not quite right for a bottom here. The daily indicator just slipping below mid-range, but not necessarily of a very wide spread, and it's not acting all that bearish. In mid-range, sometimes it will turn on a dime and give us a secondary buy signal. It doesn't have to go to oversold like some chartists and technical people want. All right, that's what my best stance is, down by tomorrow, but yes, we are coming close to when we got to consider it's going to be up by next week and maybe even into the following week. And yes, there is a chance it's just going to start working higher anyways. Don't have fresh news out there in South America. We know of the damage in Argentina. We know there's some issues a little bit in Brazil. We know La Nina's back. We know we could have La Nina here in the U.S. coming into summer. And to me, those are kind of supportive. We know the R model's back on place of a potential crop problem over the next few years here, but doesn't necessarily mean this year. We know the C model's on board with a crop problem the next few years, but not necessarily this year. We know the Gleisberg is showing chance for a huge problem this year and the next 2 years. Okay. Current situation, though, is I think the world's feeling fairly safe, that there isn't anything major coming of supply issues here. And they do have to worry over tariffs and the global economies. And the global economy is growing, but just so-so. The world trade in terms of exports, the amount of ships and business going on, that index out of the Netherlands has improved like I forecast, but it's nothing great, nothing wonderful at this time. All right, let's move to the March soybeans. Again, this is just a rollover chart, meaning you go back a couple of weeks and you'll have January prices, not the March prices. At any rate, soybeans can bottom for a level 3, but this is weird. It never really put a proper level 3 top in. If it bottoms now, I think it's going to pop for just a couple of days and right back down again. That it's an oops, put in a bottom, oops, put in a top. It may be a sign soybeans really don't want to do anything for a while here. Looking at that weekly chart and those larger trends, it should go higher, but it's already met some minimum targets. It may just struggle over the next few weeks into a top and then down for a few weeks. So it doesn't really have to be all that impressive or bullish. But I'm going to lean towards there's higher than what we've seen. I'm going to give the bulls a chance, and I'm willing to kind of forget about this level 3 top due now and saying it's just weird. It may not work right. Maybe it was last week when it should not have been. And focus more on the idea that it needs to bottom now into next week. And so this could be just a little level 4 blip up today and down, down, down. And I can see it going down to about 1033 to 1030, fill this little trader's gap in there. That's about it. Now, the daily chart indicator is widening spread as it left mid-range or is leaving mid-range. That's actually acting more bearish, even though they bounced it today, okay? So I got a feeling there's actually a little more downside coming here into this level 3 bottom for soybeans, but I think there's a chance to be higher when I look out over the next 2 or 3 weeks. I think we need a bounce in February for all 3 markets, frankly. But it may now be a struggle in the sense of soybeans has a nice run up when really we haven't created a bullish scenario from the supply side yet. Could be, and mostly from Argentina. But the world tends to discount supply issues and crop issues from Argentina. Okay, so fun stuff here. Not anything exciting yet. But I do think I look out 1.5, 2.5 weeks, we'll probably see soybeans higher. Now, in the next few days, we'll probably see soybeans bottom. Not convinced they're bottoming today. I think really blip it up a little today, put it back down next couple of days, and I can get more serious about a level 3 bottom. 5-day average can be resistance and stop this little bounce here. All right, the wheat market, this is also a rollover chart, but it's currently off the March Chicago. And this can be a level 3 bottom. I think they overdid it, a bit ridiculous here. But the dollar may give us problems in wheat fall away into summer, but in general, I still see somehow, some way wheat picking its head up into summer along with corn and soybeans. It can also have some of its own crop issues this year, not necessarily be just a corn soybean story, and it doesn't have to be all 3. It could be just wheat by itself even. Still have issues over in Europe. I think we're still going to learn of problems in Russia and tighter supplies there. But it is interesting around the world, even though I think there's some people who don't have enough inventory and need to buy. They're doing their best to be complacent. They're not that worried yet. And it's just kind of interfering here with what should be a low price for U.S. wheat, okay? At any rate, next week, I do think wheat will be up for level 3 top. It ought to bottom, and then this week be up next week and may stay up into early the following week. And they have pulled this indicator down to nearly oversold. So it is telling us that even if it wants to go lower into that level 3 bottom, it ought to start putting the brakes on. It's getting low enough priced here, and we have to start looking for that next upswing to even generate a buy signal off of that indicator. So it's in line with the model analysis here, even though it's still acting a bit bearish, and it's near price levels all the way back to December 20th. This can be some kind of floor price here. So I think the downside's rather limited. Can't guarantee it's really bottoming today. I feel like triggering a alert and buy signal right now. The model wants more upside, and therefore you're going to miss out. So if you have a reason to buy, I think you can go for it. Just realize we can have some slippage here, some issues the next couple of days, and then also ask yourself, will the tariffs coming this weekend really cause any kind of a problem for commodities yet? Or is that down the road? Can it be bullish? Can it be bearish? And so forth. Any rate, I feel rather comfortable. I think this is probably bottoming for level 3 and due for a bounce. But again, what of the dollar and what of its relationship to corn and soybeans that really probably should pull back a bit more. This could be just a level 4 blip bottom. Let's put it this way. If it trades below the overnight low, 533.5 March Chicago wheat, I think that's a sign it's probably going to take out the low of the week of 532 and have to come down closer to about 530, but that's about all I see for downside going into this level 3. Upside, I think, is going to be rather limited into the level 3 top and probably no higher than 552 for that level 3. But again, in February, we might get a nice surprise that it revisits the 565. I believe it should. Past results are not necessarily indicative of future results. Have a great day. Thank you.